Good morning, everyone. This is Anae Augustini, CID Insurance Programs. I'm CEO, and I'm welcoming you all to our most recent webinar, Understanding Property Managers Insurance. I want to introduce our prestigious panel today. We've got Dan Mulligan, who is our professional lines underwriter here at CID. And then we're really lucky to have Mary Jane Law. She likes to go by MJ, so we're going to call her MJ. And she's a specialist in this area of insurance, and she's Assistant Vice President for USLI, and we're happy to have her here. And then last but not least is our marketing specialist who administrates our webinars, and that's Jacob Cole. So let's go ahead and get started. All right, so let's start with our objectives. So what do we want to get out of this today? Definitely, I think all of you are joining because you want to understand the business opportunity better, see how you can pursue this kind of business and how much business can you write from it. Also, you want to be able to learn about the different types of property management exposures, which MJ is going to talk a bit about, so that will help you understand how to identify the type of management company you have. And then she's going to also, MJ is going to connect the dots with claims examples, which is always a good way to understand what their exposures are. And then how best to market the business and what business opportunities are there within this, just the management company. So let's get started. Property management insurance solutions is really what we're going to be looking at. And again, MJ is going to be talking about the different types of management companies. That is really the key. Listen carefully to that area, because that's going to be the key to understanding how best to insure a management company. Okay, MJ, I'm going to turn it over to you.
Thank you, Anae. Good morning, everyone. So as far as opportunity goes, as you can see, in 2017, the U.S. Department of Labor Occupational Handbook indicated that there's approximately 317,000 property, real estate, and community association managers. And only about 20% of them carry professional liability. And we expect this number to grow, especially if more states like Nevada mandate that if you're a property manager, you must have a broker on board. And if a broker's going to come on board with you, he's going to want you to have your own E&O. He's not going to want to put his E&O in jeopardy. And if states follow what Colorado did a couple years ago, they took control and mandated that anyone who did community association management must be licensed in Colorado. Hence, it was a revenue booster for them. But then they also indicated that they must carry E&O, which was great for us because it tripled our book in Colorado. So I can only see more and more states trying to gain control over the professional property managers, which is good for us. Now, we write property managers for all types of properties, apartments, condo and homeowner associations is probably our biggest class, with California being our biggest state because it's so heavy in condo association. One of our most favorite is vacation management. That's such a low risk. We do mobile home parks, and then we do commercial exposures, office, retail, industrial, as well as self-storage. Okay. So their exposures, they have an errors and omissions liability exposure, absolutely a tenant or fair housing discrimination exposure. They have the EPL exposure. They have a directors and officers exposure, cyber liability, general liability, property, fidelity, and workers' comp. And we can get into all of these in a little bit, okay? So for errors and omissions, you're considered a professional. You have a special skill that you offer to people because you're more knowledgeable about your area of expertise. You've been trained in it. You have a good judgment of what is a good risk management, situations like that. And as far as professional services go for errors and omissions, it's usually services performed by the insured, usually for a fee. Now, our professional services for the property managers is really very vague. We don't list management, leasing, and specific areas because every property manager has a different responsibility to their clients. Condo associations managers may do accounting, where an apartment manager may just do maintenance and collect the rent. So we keep our professional services pretty vague. Okay. So again, a client relies on the expertise of the professional. So because of this relationship, if the client can suffer a financial loss if the professional that they're dealing with does an error or an omission, even if it's out of negligence, it wasn't intentional, they're going to sue that professional because they're being held to a higher standard of care. So if that property manager does not carry errors and omissions insurance, and even if his error was not his fault, if they allege negligence and he doesn't have this coverage, he's going to have to pay to defend that on his own. Okay.
And MJ, I just wanted to say, which I forgot to say at the beginning, is that if anyone has questions, we'd really appreciate it if you would ask the questions as we go along. We want to make sure that we can answer everybody's questions, so we'll take the time when you ask your question to answer it. There is one that appears to be in there already. Do you have any suggestions on effective approaches to market property managers? And we're going to talk about that towards the end. So I will make sure that I do my best to answer that along with Dan at the end of this. And here we go.
So some of the exposures that they have under the errors and omissions is they have a diminished value exposure. They don't manage a property to the best of their ability, and the value of the property diminishes. They can sue the property manager for that diminished value. They have a wrongful eviction exposure. Not every property manager, but those that are running credit checks and making the decision who is or who is not going to rent an apartment or a house. They have the failure to maintain exposure. Administrative and financial errors, a lot of them are collecting fees or collecting rents. Regulatory compliance, when you have your condo association managers, they need to make sure that all the common grounds are up to code, etc. They have a libel and slander exposure, personal injury. They have a real estate exposure. Some do. A lot of property managers will also dabble in real estate sales. And I'm really excited to say that we can now accommodate those California property managers that are also doing real estate sales. At one time, we could not, but we can do that now. So if you have a risk that's doing both property management and real estate sales in California, think of us. One other coverage enhancement that we offer is coverage for the management of personally owned property. A lot of the competition thinks that's a conflict of interest because, remember, you can't sue yourself for diminished value or mismanagement. However, you still do have that wrongful eviction and that discrimination exposure. So that is a big coverage advantage. Go ahead, Ine. So I really want to emphasize on discrimination. It's not just tenant discrimination. It's also fair housing discrimination. But these types of claims are on the rise. Now, a discrimination claim is more severe a lot of times than negligence or mismanagement because of the defense costs. There's not a whole lot of damages done with discrimination. It's mostly defense. And an average defense for some of these claims can be upwards of $100,000. Two reasons why discrimination claims are on the rise is, one is HUD actually funds nonprofit testers to housing people to go out into the marketplace and test rental companies to see who is actually discriminating against a protected class. And when I say they fund them, they'll fund them every couple of years to the tune of maybe $25 million. So they're really very aggressive regarding that. And another reason these claims are on the rise is the ever-evolving definition of a disability. What is considered a service dog versus an emotional support animal? And these are now all part of fair housing. Years ago, we could all understand that person in the wheelchair or that blind person with the seeing eye dog. That was a disability that you can see, and property managers can wrap their head around that, and they know they can't discriminate against them. But now you have that war veteran coming home with post-traumatic stress disorder that needs an emotional support animal to keep him from going over the edge. Well, that's now a protected class. But the war veteran goes to an apartment building, says, I have an emotional support animal, and the property manager says, sorry, I have a no pets policy. Boom, he goes back to the fair housing, lodges a complaint, and it's now a legitimate fair housing discrimination complaint. And if they don't have this coverage, they're going to have to defend themselves. Okay, and this is just to emphasize, this was a full-page ad that HUD took out in the New York Times. So it's just for me to emphasize how aggressive they are for fair housing discrimination.
Interesting. Okay. MJ, we had a question that came in, and I think this is a good one. Well, before we go on to the next section, and I think everyone can contribute a little bit on this one because it's a good question. How do we get around the hold harmless agreements on all of these properties that they manage? And that is the argument that most property management owners will give, that they've got the hold harmless agreement with their clients, thus they don't need to carry E&O. Would you like to take that one on?
Yeah, the only place that I really see where there's hold harmless agreements that can be enforced from claims that come through to our company here are those that are doing community association management. Typically, if you're doing residential type management, commercial type management, there's not really hold harmless indemnification in their contracts. And even though there's a hold harmless indemnification with community association managers, they won't have protection in the event someone on the board wants to sue that association manager for mismanagement, which is why community association managers still need to carry their own E&O.
Right, and with the traditional property management, you're still, you can't, technically it's very difficult to be indemnified for sole negligence. So if the allegation is specific to the management company making the error, or even, and it can be an E&O, or it could be a general liability, property damage or bodily injury to a third party that was caused solely by the management company. So you cannot rely on that agreement if you're solely negligent as a management company. Anything else, Dan, you want to add?
No, but the sole negligence was the thing that I was thinking of initially. None of the contracts that I've seen will always exclude the sole negligence of the management company. So that's one of the most important elements, that nobody is perfect, and you don't necessarily have to be negligent. You have to be accused of being negligent there. So just because the management company didn't necessarily do anything wrong, they can be accused of doing something wrong, and that can, trigger coverage.
Sure. Okay. Dan, I think you're up.
There was a couple. Okay.
Okay, so employment practices.
Okay, go ahead, Dan.
Okay. Employment practices liability coverage. Not only with property managers, but with all your risks. This is a coverage that needs to be addressed, and you need to quote to all your clients. Right now, a property management company is more likely to be sued by an employee / former employee than one of their clients. The EPLI exposures we have federal laws, we have state laws. The federal laws, you're looking at the FSLA, type of items. State laws vary from state to state, whereas a state like Texas is very conservative. There's not as many laws there, as the state of California is very, very liberal, and there's so many laws out to protect the employee there. Things that people are getting lawsuits against are wrongful termination, sexual harassment, workplace harassment, retaliation. Those are some of the most common claims we have seen recently. On EPLI, there's a couple of things that you always want to look out for. One of the most important items is going to be defense costs outside the limits. What's really significant about defense outside the limits on EPLI is very litigious, where the claims expense is usually a lot higher than the award. So your claims expense is going to be higher than the indemnity there. So defense costs outside the limits usually doubles or triples the coverage that you have. Another coverage that people want in EPLI is what's called wage and hour. What wage and hour does is protects you from a lawsuit that is solely over the wages of one of your former employees there. In California, though, for property management companies, it's very, very difficult to get the wage and hour. Most times you have a wage and hour claim, there's going to be something attached to it, like a wrongful termination or sexual harassment, failure to promote. That, when you have that with the wage and hour, you owe me $10,000 in back pages. A policy without wage and hour coverage will cover the that allegation, because you can't separate the allegations there. But if it's solely wage and hour, there's going to be no coverage on it unless you have that coverage. Let's go on to the next coverage, which is directors and officers coverage. A director and officer can be held personally liable for your decisions. The only protection between a claim is on their personal assets, maybe a D&O policy. Average D&O claim is for a private company is $300,000. That's a settlement, judgment, and defense. 39% of private companies with 25 or more employees have experienced a D&O suit in the past 5 years. A lot of agents don't really think about offering this, but if you have a board that's running the company, you really want to consider D&O coverage. Private companies are sued by their employees, shareholders, investors, competitors, suppliers, customers, and lenders. Here, for property managers, the thing that I see the most is that the directors and officers are going to be sued from their competitors. One of the claims that I have seen so many times involves a property manager going from company A to company B. With them, he has a relationship with some of the board members of homeowners associations that he manages and stuff like that. So when he goes to the new company, they move over to him. Next thing you know, the new company gets a lawsuit for taking their clients away, unfair trade practices and things of that nature there. There is no defense on an E&O for that. This only protection that this new company has for these allegations is a D&O policy that can, trigger coverage on that. It's very common in this, arena of property management firms to get sued for that. Next, we have cyber liability. This coverage is emerging every day, and it's expanding and getting broader there. Your basic cyber liability policy can be broken up into 4 parts. You have your part A would be your data breach, security breach, defense and regulatory proceedings, PCI fines and penalties. That's for credit cards. If you're being fined by the credit card companies and the government regulators on that for mishandling of the credit cards, not protecting them properly. Part A can basically say the liabilities the insured has for a cyber breach. we go on to the next part, Part B, it's going to be your data breach expense, cyber extortion, business interruption, data restoration. These are the expenses that a company has for having a cyber breach there. Part C is your website liability, so that's going to be where your media coverage, your libel, slander comes in. Part D is your identity theft. Where it's significant with property managers is a lot of property managers now are utilizing the internet for payments, showing of properties. People are posting items, excuse me. So with all these things that are being done online, you have the potential of breaches that can cause a severe financial loss for their clients. That's why cyber liability is now such a necessity. There. Okay, now going on to the next coverage, we have general liability. General liability for a property management company can be varied depending on the type of property management they're doing. What you need to do first is you need to look at the property management company, determine what type of management do they have or are they doing. Are they managing single-family homes, vacation properties? Are they managing condo associations? Big question, do they have a maintenance company there? Are they providing the maintenance or are they just overseeing? That is huge because the maintenance exposure is something that we have to address differently than the management side of it there. So when we look at general liability for property managers, we have coverage for the bodily injury and property damage as a result of the organization's operation. Professional is 100% excluded from this. There, we have three types of coverages. We have what's called a office premises only policy. The earlier question with the hold harmless agreements. There, a lot of management companies will just say, okay, well, we'll just have a off-premises coverage. They start at like $500. All that's providing them is if somebody comes to their office and slips and falls. There, it is not providing them with coverage for anything that happens off their premise on the properties that they manage. The more expensive, and that's always going to be rated on the square footage of the premise that they manage. The more expensive coverage and the more comprehensive coverage is going to be a full CGL policy there. What this policy does extends to the properties that they manage. Also, usually will give you the ability to have hired and non-owned auto there. But the one thing that we have to remember on this, and very significant for people with managing vacation homes there, this policy protects them as a secondary coverage and does not provide any property damage. And this is for any of the general liability policies for the property that is being managed. What that means is if they go in and they have a maintenance person go in and change a sink and all of a sudden there's a flood and they have all this mold, there's going to be no coverage for it because that property is not covered for property damage there. That solely needs to go onto the exposure of the homeowner. That's why if your property management companies have a maintenance department, they need to get that maintenance department covered solely by them on their own standalone policy because the general liability is not going to cover the maintenance there because of the class code 47052 real estate property managed. You have that huge exclusion for, and it's on all the policies that I've seen there.
Got it. That's a good point, Dan. So I'm going to cover the other coverages to consider. One thing is never forget when you're dealing with a professional office, you always want to be looking at the appropriate property to be insuring, meaning that you're looking to everything that would be in the office and new for old to get a proper valuation. Always break out anything with a computer chip and ensure that under computer and media, and then everything else would be just your business personal property. Fidelity is an extremely important coverage for management companies because they're managing properties and they're managing the funds of their clients. So there's a higher exposure and a higher duty there. We have products for standalone Fidelity that are broad, that provide employee theft coverage, to include computer fraud and funds transfer coverage, which has become super important because there is so much, and this is a confusion that sometimes happens. Cyber policies are not intended to cover the electronic theft of funds out of bank accounts, which is happening all over the world. And so when a third-party hacker gets in or does a phishing technique and steals the password and sign-in, any money that they steal by transferring it out of the account is not going to be covered under a cyber policy. That theft would be covered under computer fraud and funds coverage transfer, and that should be a limit up to the same limit as the employee theft coverage. Also, general liability claims are happening often in the industry, so having a higher limits for the management company, even if you have indemnification and a hold harmless agreement, sometimes the courts and the attorneys are pulling the management company's coverage in, and it is always best to carry as much liability coverage as you can afford, and that would be really the general liability. It would go over the general liability, not the E&O. And then again, workers' comp should always be considered, and we can assist you with that as well. I'm going to go back here. Oh, okay, we are in a mess here. I think, MJ, I've got you towards the end. We had a little shift in some of the PowerPoint or slides, so I apologize for that, but we will get to everything. And again, if you have any questions, please type them in. I'm getting ready to start answering your question that came in earlier on how to market this. So property management companies have clientele. So determining what that clientele is, if they're a traditional property management company, they're more likely going to be insuring single-family homes. They could be doing vacation homes, and they could be doing apartment buildings as well. Then you've got, as MJ mentioned, the community association management companies that are doing nothing but all types of community associations. There's also a personal lines opportunity for those when you're dealing with single-family homes. So I consider these a POS, a point of sale, where you focus on insuring and being the expert for the management company, and then you become the expert for evaluating the insurance for all of their clientele. I know that if you need some lists for management companies, we can help you out with that. Depending on where you're located, we might be able to identify some lists for you to go after some of these management companies. But you can join or become associated with CAI, CACM here in California, these are trade associations that are totally designed, and there are some there's the traditional property management associations. There's apartment owners, association, which you can connect up there as well. So there's all kinds of trade associations that you can get connected with, and then get lists that way as well. Let's keep going. Okay, I think we covered this slide Is there anything you want to say on this one, MJ?
No, I think we touched base with just about everything with this one.
Okay, so here's some claim examples for you, MJ.
All right. So here's an claim example just to connect the dots with their exposure. A property manager working exclusively with a 250-unit apartment complex as they become available. And 6 months after he begins working on the job, only a small percentage of the units are occupied. And there's a lot of outside factors that are causing this, including the closing of a large employer, heavy construction in the area, and the construction of other new temporary housing developments. But you know what? The owner of the complex didn't see it that way. He was seeing it that you did not rent out my units like you as a professional had said that you were going to do. So he sues the property manager for the failure to rent the properties in a timely manner and lost income. Again, even if that property manager wasn't responsible for not being able to rent them due to other outside factors, if someone alleges this and he doesn't have this coverage in place, he's going to have to pay to defend himself. And I think the other claim example that's next should be a discrimination claim. And I just want to preface this to say, just to put into perspective how disability claims are on the rise. In 2017, there were 28,000 fair housing complaints. Of the 28,000, 57% of them were alleged for disability fair housing complaints. That's approximately 16,000 of those. So you can see out of all the fair housing, how a disability is the biggest exposure. So I guess in hindsight, this should be a disability exposure claim example, but this is one that has to do with their credit checks, and this is one that has to do with someone who owns the property that he's managing. So a minority couple applied to rent a property from John that he owns, but he declined their application due to their poor credit history. And then after that, he rents it to a non-ethnic couple with excellent credit. And the first couple, still in search of a place to rent, see that this home has been rented so quickly, and they sue John for discrimination, claiming he declined their application due to their ethnicity and not their credit history. Now, even if John has full, proper documentation of when he ran the credit checks, etc., the minute they allege a fair housing based on race, if John doesn't have this coverage, he's going to have to defend himself. And the same thing, as I said, like that post-traumatic stress disorder war veteran who says he has an emotional support animal. Emotional support animals do not have to be a dog like they do for service animals, for seeing eye dogs. Emotional support animals do not have to be certified, and they can be anything. They could be a rabbit, they could be a cat, they could be a dog. So that just helps muddy all the waters.
Absolutely. MJ, is this is an optional coverage on the USLI E&O policy, correct?
Correct, it is. It's a minimum premium. It's not a big premium to get, but it's a big exposure that they have. So anyone who's doing management should absolutely have discrimination coverage. Even your community association managers, even though they're not running credit checks and making decisions who's going to rent, we're seeing an uptick in claims from people in community associations claiming, oh, the association manager didn't give me a handicap spot close to my place and I'm disabled. Or we actually have seen claims where people are alleging that they're being discriminated against based on their race, even though the community association manager was trying to enforce covenant laws, such as what color could your fence be, or you're not supposed to have your trash cans out 2 days before trash pickup. So they don't have as big of a discrimination exposure, but they still do have a discrimination exposure.
Correct. Okay, thank you.
Mm-hmm.
So I'm going to close this and say thank you to our team of experts here. We're going to be sending out a property management E&O application and a marketing piece for you to use. And so, Dan, Dan is your underwriter for professional or for all of the property management products, and so he is the person to contact if you have any questions. Dan, how easy is it to get an E&O quote from you?
Well, for the E&O, very simple. If you can just give me the basic information, what type of management revenues, this is assuming that they have no claims, if they have prior coverage, what the retroactive date is. We can get a quote for you with just some general information with either calling me up or shooting me an email. I'll call the carrier up and we can have a quote for you within 24 hours there. We can do that for the E&O and the EPL and even the cyber. Their general liability will need applications and supplementals there, and the D&O will also need applications, financials, and things of that nature. But in general, we can get the quotes for you really simply.
Perfect. So we have some questions, so please stay on and let me answer these. We will be this webinar will be published on our website under our resource tab under webinars. And so you'll be able to go either have any of your staff or yourself be able to listen to this and watch it again, just as if you're watching it today, as many times as you want. So you'll have those slides, and you can watch it as many times. If you want a copy of the PowerPoint, please, you can email us and we can send one out to you. There's also, are we also going to discuss GL exposures and coverage? Yes, we did. If you have any specific questions relative to that, let me know. I think the biggest exposure with GL is the bodily injuries that occur at the property being managed, and how the management company gets pulled into those, even when it is not even, it doesn't really involve their negligence. So having that full GL coverage, in my book, is more important, unless they've got a strong indemnity and they're going to be able to push everything onto the client. EPL claims. Insurers do try to separate covered allegations from uncovered allegations and attempt to get insureds to contribute to settlement. Insureds need to retain attorney to represent themselves against the EPLI company in reaching a settlement.
If it's EPLI related, the carrier, for instance, and let's say it's a wage and hour dispute along with the wrongful termination, the defense is actually going to cover everything on the policy since it's one allegation of an employment practices liability, and there would not be a need to get a second attorney involved in it because the policy is already triggered coverage for that event.
I agree with you, Dan, on that. MJ, do you have any thoughts on that?
No, I agree.
Okay. How long is business interruption covered for, and is there a time deductible? That's on cyber liability.
$2,500 deductible is going to be standard, depending on the market and whichever policy there. Some policies have a coinsurance of like 5% coinsurance. Some don't. The USLI policy does not have a coinsurance for the time deductible. It's just a $2,500 deductible there, and it's usually up to 60 days. But on a cyber breach, you're usually back, within a week or two.
Okay. And there's a question. I think I understand it. Is the plan's GL premises only or comprehensive? I'm not sure what the question is, but clearly a comprehensive GL policy that has off-premise is going to be more comprehensive than a premises only, which is only going to be for the management company's office space that they have, and it will not extend to the clients. So if you have any specific questions on that, go ahead, Dan.
I
Yeah,
just wanted to add to that on the GL that we offer for the premises. It will cover their office, and it will cover any off-site business errands, such as if they went to the bank or if they had to meet a potential tenant at a Starbucks and there was a trip and fall as a result of his briefcase, or if they needed GL for a trade show. My premises will extend to that, and I can most of the time also offer hired to non-owned. My GL, however, will not go to the properties that they manage. Sorry, Dan, I didn't mean to interrupt you.
No, I was just going to say that say that with the E&O, we can offer the premises policy, and you had said what I was going to say.
Okay.
You just answered the next question, which is is the E&O standalone policy or can it be packaged? And so, thank you, MJ. You're reading the attendees' minds. How hard is it to get GL from you? It's easy to get GL from us. You just work with Dan, and he will help you get that. That one will probably require an application. However, unless you're only doing the premises only coverage, he can probably do that fairly easily for you. And so, the question, most successful way to market these products, that's really to target the management company and then target all of their properties that they manage. And as I mentioned before, there's a lot of trade associations out there, and I know that there's a request which I'll have Jacob address for a list of management companies in Texas. So we'll see what we can do to help you with that request. And so what are the biggest objections to buying these products? Anybody want to handle that one? Dan?
We have the hold harmless thing, and I don't do anything wrong on the E&O. I just follow the direction of the board. Those are the objections that I hear from the retailers out there. And they need to let the clients know that they don't necessarily have to make an error to be accused of an error, and the cost to defend themselves is so astronomical there. I mean, it's just so expensive to get a lawyer to protect yourself. And like I said, you don't have to do anything wrong. It's just being accused of it there. And they think that, we have the D&O policy of a board is going to cover us. It's not covering you for your negligence there. So you need to be really direct with the insured or the property manager and say, it is not covering you. They have an assumption because of the hold harmless agreement, the indemnification, but it does not work in the legal court of law.
Right. And Dan, we could put together some claim examples that might be helpful that they can use with their clients for anyone who'd be interested in that. So there's one last request, and MJ, I'm just going to ask if you have any, because I think this was your area. Can you forward statistics used in this webinar as they act as strong third-party facts validation that help tremendously in our presentation to PMs and HOA managers?
Sure, I can forward over the opportunity of what the 2017 labor handbook stated, and I can send over like the discrimination claims, how there were. I'll get exactly how many claims there were and exactly what percentage were from disability claims. In fact, I may even have the breakout of all the other protected classes in a percentage. I just thought I would emphasize the disability one.
Perfect.
But yes, I can get that to you.
So. Thank you so much, MJ. I don't see any other questions that have come in, and we ran over a little bit.
But one of them was, will the EPLI pay FSLA back pay judgment under the scenario you mentioned? If they have the wage and hour coverage, it will pay the defense for it. The back pay is not covered under wage and hour coverage. You, the employer, has to pay that out of his own pocket. That is uninsurable. So no, it will not pay the judgment. It will just pay the defense on the FSLA.
And there's a question on the hammer clause. How is the hammer clause written on this policy? MJ, would you like to take that? MJ?
It's a 75-25.
Right. And same with the EPLI, 75-25.
Excellent. I'm just trying to make sure. And again, someone asked about claims examples, so I've already mentioned that we will put some claims examples together as well to send out to the participants that have attended.
Oh, if there's any claims examples or anything of that nature you need, just email me directly, Daniel at CIDinsurance.com, and I will get it from our marketing department and get them out to you. It might take us a day or two, but just email everything to me, and I'll work to get that taken care of for you.
Okay. Thank you all for attending. Please visit our website. And again, you can watch this webinar again on our website. You'll see it under the top white tab on the menu bar under Resources, Webinars. All right. Look forward to seeing your submissions come in. Bye.
Bye.